So now let's get back and um, let's talk about what we did in the last class firstly. So last class we spoke about some introduction. We'll had a look back and stuff. If you all have gone through the slides, uh, we just spoke about what is a popular tool for charting. So we spoke about mm, TradingView as one. We spoke about few demat brokers and its benefits and the way it charges brokerage. So I just wanted to bring to you about Finvasia because these guys have zero brokerage, but they are not very good when it comes to charting or even there are lags and all that I see in between. But the major thing about options trading is you go for multiple trades and uh, in short, if you go for some 3 or 4 trades, it is as good as your profit. So, we would want to consider something which has got, which is a okay one, and which would have, kind of a lesser brokerage. Unless you are dealing with something like, if you are a heavy investor, I would always recommend you go for Zerodha or something very stable. Even go for the full-time broking accounts like HDFC and ICICI Securities and all. We spoke about differences between investment and trading. Um, so investment is basically a longer horizon that you keep in mind. You don't keep it for a shorter period of time. So you will look at a few months to years to multiple years. But whereas when it comes to and investment again can be broken into two: a short-term investment and a long-term investment. The short-term investments are basically called swing trades, which would go on for a couple of weeks to months, not more than a month or anything. You'll just uh, s- keep it for a smaller time. And we analyzed few stocks. We went into Screener to see how we can get financial reports. And yeah, that's all that we did last week. And now we would talk about futures and options. So what is futures and options? So futures and options come under a big division called as derivatives. So derivatives are something like you do not have a physical stand of your own, but you depend upon something else for its price. There is an underlying asset to a derivative. So um, the very good instance here is the Bank Nifty or the Nifty. Bank Nifty or Nifty doesn't have anything on its own. Although it shows that it is a bigger index, it depends upon few stocks which are there in that specific index for which um, there is a price derived, right? So what you can say here is index is a derivative in itself. Now what happens in option? Okay, now that is a spot price which is taken into consideration whenever we speak about derivatives. This is the first thing that happens. That is there is a price that is derived from somewhere else, and then you you come and form a price out of multiple stocks. That is what an index is. Index is further divided into futures. So right now, when all the stocks come together and form a price, that is called the spot price. Now that same thing you can think about trading it in the future. Okay, so now at any point of time, there are 3 months futures which would be open. So right now, if now it is October, so November, December, Jan, these 3 months contracts would be open. So we can go ahead and have a look at that in our demat accounts a little later. So that is one point of it. So uh, when we talk about futures, futures also do expire. The spot price is always there. It would keep on updating itself, but all the contracts that are made in the market would expire at a particular time. It could be weekly, it could be monthly. So how our Indian stock market is divided is the monthly expiry is for stocks. There is a bigger index expiry for on the month level, but there are shorter expiries on the weekly level as well. So what traders usually do is they prefer to trade the weekly options, which would be, which would expire in few days. Like for example, if you take something like Fin Nifty expires every Tuesday. If you take Bank Nifty, it expires every Wednesday. Nifty expires every Thursday. There is from the BSE, there is Sensex, which expires every Friday. I think on Monday it is the mid cap that expires. I have to. I don't trade much in the mid cap Nifty. So, but I believe Monday is also an expiry day. So there are different expiry day and different ways how to trade it. So why do people prefer expiry is because there is a lot of movement in the market, maybe upside, maybe downside. We would have a track of that by looking at the charts and analyzing the charts and so on, right? So now, what are options? Options are basically again subdivisions of a index or maybe of a stock. This again, as I told you, try to match up the derivatives funda to what you have as options. So options as such does not have a stand of its own. It derives the price from an underlying asset. So uh, right now it is just not indexes, but it is also stocks that has a option value. Commodities like you take crude oil. Crude oil has got options. It has got futures. All of them are there. So this is how the futures and options work. I have given a description here, which I would expect you to read later. Okay, now um, futures and options are a double-edged sword because um, there is a lot of there is a lot of other Greeks attached to the futures. It is not attached to the futures though, but for options, definitely it is. So in case again, if you're dealing with a higher capital, I would always suggest you trade in futures rather than going into options. Either you trade in futures or you go for a hedged option. That is the best way to trade futures and options. Plain naked options buying is a big risk. Plain option selling would be too costly. That's how you could take this as. So for the beginners, I always suggested that you practice with intraday and swing trading only, and you get some leverage and all on the intraday. We did not speak about it the last time, but then that's just a piece of information that I wanted to give you. So I just wanted to bring to you about, okay, I'll talk about intrinsic value when we speak more about the option chain. All right. Okay, these are all option concept of ITM, ATM, and OTM. So firstly, let's look at how does a option chain look like. So let's go to, I have opened Sensible here, but even better would be, I'll go to NSE India. Has somebody put me on speaker because I can hear my echo back to me? Hello? Yeah, this is fine. Can you all hear me? Still can hear me, right?
Yeah, we can hear you.
Sure. Okay, thanks. So what I'm doing here is I'm opening an option chain of Bank Nifty. Okay. So this is an option chain. It basically has got four quadrants to it. Okay. You see this gray highlighted part. This is one portion. This is another portion. The two whites are two different other portions. Okay. So what do you actually see here? You have various other components like OI, change in OI, volume, IV, LTP, the change of price, the bid quantity, the bid and ask also. All right. So what does this ideally become is our option of 44,584. This is the spot price. Okay. The prices will be slightly different when it comes to futures. Every future would have its own price. Okay, so as I told you, there are 3 months future that would be going on. So depending upon what we foresee in the future, the future prices would be dependent, would be changing a little bit at least. So the October, the November, and the December, they would have three different prices when it comes to the futures, but the spot will remain as it is. I mean, the spot will remain based on what is the current price, right? So what we have here is another list of all the expiries. The closest expiry right now for Bank Nifty is on 4th, which is the coming Wednesday. All right, that is day after tomorrow. So tomorrow, what we would see is we would see that Bank Nifty is on the second last day to expiry. What does that mean? That people who are trading tomorrow does not have much of an option to take it for a longer trade, and there would be a consistent decay in the prices. Okay, we'll talk more about that when we reach there, but let's understand what is an option chain firstly. So what we got was 44,584. Okay, let's take a round figure of 44,600. Okay, now if you see this 44,600, observe this closely. What do you see is you see that the quadrant division is being changed over here. So the top portion above 4600 is highlighted in gray. The bottom portion is highlighted in gray here as well. So what does this become? This becomes at the money. 44,600 becomes a at the money call, at the money option. Okay. Now you have to look at it from two sides. There is a call side to it. There is a put side to it. Okay. In short, what you can say is these have all become individual stocks. Okay. I'll show you how that works also. So 44,600 is our at the at the money call, at the money price. Now from a call side, when I look, this portion is called in the money because it is below our spot price. We would call it in the money, and this portion would be called out of the money. But when I'm looking out from a put side, what I'm going to expect is this portion, the gray highlighted portion is in the money for me, and this is out of the money. So what we can say is for the call options, you're going to travel from top to bottom. From the put side, you're going to travel from bottom to the top. Okay. Now, I know I have confused you enough now because I already spoke about call and put options without even telling you what is call and put. So right now, at the spot level, say you are a fresh trader who came in and you have a view of the market saying that it will go bullish. So what do you actually say is you are going to go the call side or you're going to go the CE side. Why CE? It is called call European. That is the option funda that India follows. We got it from the British. And there is, apart from this, there is also call American and call European and call American. Similarly, put American and put European. I frankly don't know anything about the call American because I'm not even looking at their market and I didn't study their system at all. So uh, net net, right now, what we understand is we whenever we find that the market is going to go on the upper side, we'll call it bullish. So we are going to purchase the call options. Now, this is at the perspective of a buyer. All right. Now, I could also say that whenever I go for a call option, when I look forward to buy a call option as a buyer, a seller would be going to sell what option it would be? Any can anybody guess? Okay, so he's going to sell a call option. Whenever he sells a call option, it would be that he would be expecting the market to go down, but he would be selling a put option where he would expect the market to go up. So let me see if I can show you some example.
Vicky.
Are you all clear about this, or so far clear?
I think, yeah, I think we're understanding.
Okay, you're understanding that as a buyer, I'm going to buy the call options, and as a seller, I'm going to sell the put options, right?
Yes.
Vice versa. Okay, but the catch here is, say for this particular premium that I'm purchasing. Okay, now there is something called as a premium price for a stock, which is at say right now it is at 224.95, right? So at this price, when I'm going to buy a call options, it would just cost me, this is Bank Nifty, so 224.95, 225 into 15, whatever is the price, it would be around about some 3000 odd. This would be something that I'm investing for purchasing this call option. But when I'm going to sell this same call option, put option here, which would be 171.85, this would be, if I just do a naked selling, it would be around about 70,000 odd, uh, because the risk to a seller is unlimited, but the risk to a buyer is just the price of the premium. So 225 is the risk that is taking, but for a um for a seller, it would be a bigger risk, and that is why there is a bigger margin that is charged for him, right? So uh, market statistically, 66% of the time, it is the sellers who win the market, and 33% of the time, it is the buyers who win. Okay. So what happens to a let's assume that you are going today morning into the market and you are starting off by purchasing a call options by looking at this, right? So at this point of time, the first thing that you have to keep in mind is there are options Greek attached to every option that you purchase or sell. So there would be changes in your Greeks which would impact the entire option that you have purchased. So I don't see IV. Oh, there is IV here. So there is something called as the implied volatility. Okay, that is also a part of this. So right now, it says that there is an implied volatility of 9.68. This is pretty low. So what does it say? It actually says the fear of the market. Fear of the market in the sense, I would rather call it like say something like uh, what is the maximum movement that it can do? All right. Now this is not going to be fixed for a longer time. At every data change, this is going to change. And this data changes every 3 minutes, but the prices change more than once in a second also. I mean, it goes into that level of micro milliseconds where the prices change so constantly, right? So you would have to bear in mind that once a option buyer who purchases an option is at risk of a theta decay, which means his option is going to get eroded by time, so he cannot afford to keep his positions open for a longer time. So now longer time doesn't mean that you buy it at 10 a.m. and sell it off at 10:01 a.m. That may not be a good a strategy unless you have something really planned for it. Like there are some high frequency traders that comes in who would just catch a small profit, like say 5 points profit, and he would exit out of it in couple of minutes, maybe 3 minutes, 5 minutes. I could refer you to some YouTube channels. There is a guy called Stock Burner. He usually does this, and that specific thing is called scalping. So he doesn't go more than 15 minutes with a trade, and he doesn't take a loss also. No, that's his funda of trading. All right. So uh, net, what we are trying to talk here is there is an option, there is a price attached to it, and this price for a buyer is going to decay over a period of time. There are various other factors which would impact the decay. One would be the IV, one would be the gamma, the theta, the rho. There are different Greeks which I have explained in the uh, PowerPoint here. So what is delta? Delta is basically, so always at the money. There is no delta in the NSE website, but what you can ideally say is wherever you are starting with the delta. for at the money, it would start with 0.5. That is 50%. What does this ideally mean is for every 100 or every 100 rupees move, it would be 50% of the price that would be increasing in your LTP. Like say for example, now let us take this as a scenario at 46 44 600, whatever is the price. Okay, we took 225. Now from here it moves, say 100 rupees from 44 600, it went to 44 700. So what you would ideally look at is the price would move the opposite side. I mean, it would be increasing on the opposite side. You are you are going to have an increase in the price, that is from 44 600 it is going to 44 700, but the price would be traveling the other way around. So 225 would roughly come to 287 on a 100 points move. That is round about 50% or 0.5. Now this is not the exact calculation. Okay, there is a lot of things that would go in. It would not go exactly 50 points, because there is going to be a factor of decay over a period of time. The theta would come into play. But net net, you can say that the next moment, if it increases 50 points, this is where you're going to be 225 to uh, 287. All right. Now, how would you, what would be your actual profit? Your actual profit would be this 50 points into the lots that you are trading in. So 50 into 15 would be your actual profit. So whatever that comes, 750. All right. That is the reason why we would have seen. I mean, when I posted a screenshot for somebody, he asked me, how did I make this much? So it was that quick moment. And if you actually see Bank Nifty, moving 100 points is not a big thing. If you would see here, this is Nifty Bank. Look at the open high low and close positions here. Say if I say 44508 was the open, let's look at the high 44588. It has just within a matter of 7 minutes, here is the candle length. Within a matter of 7 minutes it did move round about 80 points. Okay, so I mean, if I would have just taken a trade and held it till here, you would see that here the high made was 44,681. Here we brought it at what 508. Say 500 we take on an average for easy calculation, 44,500 to 44,614. So this is almost 115 points. Okay. Now that's what we got to see there. Any questions so far?
No.
Cool. Okay. So there are different things like one is the delta that I explained you. One is the gamma. The gamma is the measurement at the rate of which the options delta with respect to the underlying asset would move. So the movement of the delta is captured in gamma. All right. This would be a little confusing, but this is something that we don't, I mean, as a end user, you would not be really bothering that much about it. You would be more about concentrating more about the delta as well as the theta. So theta, as I explained you, is at the loss at which you will be having when you would be doing an option. Say for example, right now, let's say Bank Nifty is at, say, this point. Okay, here there is a high that has been made here at 44,602. Suppose say we are here at this point of time, and our price on the option chart for an option is 225. Like we took the at the money. Okay. After some time, it went down, it came up, it went down again. By the end of the day, again it reaches at this stage. All right. At this point of time, if you would check the options price, it would be far, far lesser than 225. It would have today being a Monday, there would be not too much decay. So instead of 225, it may be at say 205 or 210, something like that. So what is it? What is it for the options buyer in this? The options buyer, he has to square off his position immediately. I mean, it is always better to go as an option trader with small profits. Like you get a 20 points profit, you exit out of it. You get a 15% profit. On an expiry day, you may even look at a very small price. If you get a 10% profit or 10 points profit, just book that, come out. Because you don't want to keep your trade for a longer time where you will face a decay in the options price. So there you have to be really ensured that you make quick decisions so that you remain in profit, right? The next big thing about the rule for option buyer is do not average. So here in a stock, what we do is like say today for a basis of investment, we have purchased say Reliance at 2500. After a week, we seen that it has gone to 2250. We had a loss of 250 rupees. But still, what we would do is we'll average it out. We'll average it out, thinking that we would go up in a coming days, and eventually it will definitely go up and give you a better option, better returns on one particular day because you first brought it at 2250 and now you brought it at 2500. You earlier brought it, then you brought it at 2250, which makes it 2375. And when it goes say about 2500, you are actually holding it at 2375, and the difference is definitely your profit. So that's what you do on a longer term investment. But here you are bound by time, you are bound by various other Greeks which would be following. So hence in a option trading, it is definitely very very important to um, book your profits and losses at the earliest, and do not average it. Do not average it unless you are that confident. All right. Any questions so far?
No, it's clear.
Cool.
Yeah.
Okay. Now I'll talk a little about strategies. Okay. So now we know that, the longer that we keep, if you are an options buyer, you're going to lose money. But the shorter that you keep, you are going, or as a seller, the longer that you keep, you are going to make money. And so we would need to kind of design a strategy which would kind of help you in both. So I'll introduce to a site called Opstra. Just before that, in case if you have anything to discuss or anything to ask me specifically, I can help answer those. Otherwise, I would just go ahead and explain you what this is. Okay, I don't know how much of back testing results I do get here. Let me see if there is no. Okay, there is a strategy builder here, which is by default available. Okay, so now, okay, what is the stock market all about? Firstly, if you see, it is all about speculation. Like, say, I feel that, or with my analysis, I feel that the market may move 500 points on the upside, or I would say that the options would move 500 points on the downside. This is my speculation, right? There would be many others. I mean, my views would be different from Pradeep's view, or Rakesh would have a total different view. So everybody has their own view, and that views are created by analyzing the market, right? So there are certain strategies that you can go ahead and deploy. So there are some bullish strategies, there are some bearish, there are some non-directional. Okay, now we understand these two terms. Like bullish means we would say that we are expecting the market to go up. There is a bearish strategy where you're expecting the market to go down, and then there is something called as non-directional, which does not go in any direction. You feel that there is market is going to be sideways. Now how much is sideways according to you? You can define that for yourself, right? So let's start with this. Say, for example, I'm a very new trader who came into the market. Okay, I have no idea how to look at the option chain. I don't know how to figure out where is the support, where is the resistance, nothing. Okay, but on a longer term, I have seen the previous histories, and I have seen that the market does not move more than say 300 points in a week. I'm talking about Nifty. So Nifty does not move 300 points more than 300 points in a week. So I want to play safe here, And what I'll do is I'll go with something saying that I'm going to be um, a long-term investor, which means I'm going to be a seller. So I would design a strategy which would give me something like a very small percent, but I want to capitalize more on the theta decay. So whatever the buyer is using, going to keep the trade for a longer time, I'm going to utilize that as my profit, and that's the only thing that I'm looking out for. So what I'll do is I would go ahead and make any of these. Okay, all these are different strategies with different intentions. So I would go with something called as a short straddle. Okay, I'll tell you the reason why I'm going for this. Okay, and I'll just pick up the defaults. So right now there is a payoff chart that has been made. So right now the market is at this point till the close of the market. That is, I have picked up the expiry as 26th October. I'm going to go long term. Okay. So what is the estimated margin for this? I need round about 1,06,000. Okay. And what is the max profit that I can make? I can make around 6,300 rupees profit, which is approximately around about 6%, close to 6%. My probability of win is 72%. This is like awesome. Like out of the 100 times, 72 times people have won when looking at this strategy. But something that bothers me is 1,06,000. I mean, this is too much for me. So what do I do in order to reduce this? So I can add some more. What I would do is I would say this is the futures chart. So I would go ahead and buy. I'll add few more positions. So right now the market is at 19,150. It has taken some, sorry. So actually, if you would see what has happened here, it has increased, but let us see Nifty and futures. I'll go for options. Expiry date is the same. I'll go for a very big C, like say some around 2,100. I'll add a position. So it has not made a significant difference. I'll just go and edit it and I'll go for even bigger. 21,150. This is like almost 1,000 points above. Okay. It should ideally change along with a PE as well. So PE, I'll go for a very big out of the money. I'm just showing you this as an example. Okay. If you see now, the estimated premium has come down to 65,150, but this still not is the ideal one for me. Okay, I have to bring it close to 5.8. So I'll go for even lesser. Okay, it actually did. I feel there is a bigger span calculation that is happening. So basically what we have done is we have hedged these positions, and right now we are expecting to see a bigger profit, 7.72, and our estimated premium from 105 106, it has reduced to 73. But now the thing here to notice is this two this two options will not earn us a profit ever. This would totally be going to zero. How about these two? These two would be earning us profits in bits. So if you would actually want to try this, you can copy the same setup into your Opstra, and you can take a screenshot of this in case anybody is doing this. Okay, the same thing you can apply it into your Opstra and keep looking at every day. So what you can do is you can there is a hello,
Yeah,
there's an option to
first
save this.
no, I'm not able to see anything on my screen. The blank.
Is it for everybody?
No, it's
No,
clear
I'm
for
able
us.
to see.
So it's
I'm
visible.
able
You
to see.
can see
Okay.
the.
Did I mean, I don't know, but my screen is blank.
Okay, so what I'll do is I'll probably pick up a screenshot and put it in the this thing itself in the
And leave the call and join again. Maybe some
yeah, ma'am. So what I'm going to do
settings.
here is I'm just going to put a new slide and I'll just paste this screenshot here so that I can share it with you. Okay, this should work. Okay, so what you would see is whenever the or we can see it from here itself, like whenever the price is moving, see the price has moved by 4.5%. This is not possible though very soon, but you would see that there is changes here. At when it has moved up 4.5%, it wouldn't move that much for sure. You have received a loss of 51,000 out of your 73,000. You have received a loss, but 4.5% is definitely not a move. I just dragged it too far too away. Minus 3.5 also is not a this thing, but you still see the loss as 51,000 when I moved it till here. But if it were to move something like a 1%, that is the move you still have covered. Come on, refresh. Okay, I don't know why it's not refreshing, but you would actually see the changes like your total PNL. This would keep on changing on a live status, on a live one. You would actually see this is more for just understanding. Like, say if it has moved up till here, what is your total profit or loss? Now, if you would see, look at this portion here where it says T plus 0 PNL. So minus 54, minus 3, minus 2, so on, right? So similarly, if it moves on the other side, what would be your maximum loss? What would be your maximum profit? You see the PNL on the top. So this is how you would, what you would actually want to do is just apply the strategy or just take this screenshot and go into Opstra and save it into your strategy. It has already been saved, I believe, portfolio. So it would be here. And when you come back here to portfolio and go to paper portfolio, you will see this. So tomorrow when I come, after the market has started moving, it would start giving me some of the other results. Like when the market moves, it would give me some percentage of profit, some percentage of loss, and so on. So accordingly, the buy ones are something that is bound to become zero. By the end of the month, this would be becoming zero. Whereas one out of these two would become zero. So minimum that we can get is 40 points. So 40 into 50, 2000 is anyway something that you're going to get minus the 8.5 plus 6, some 14 points you can minus. So this is something that you're going to get for sure. 40 minus 16, around 25 points. So 25 into 50, whatever is the answer, that is your sure shot profit. This 79 also will definitely be becoming zero. The one that is estimated here in the analyzer, right? The analyzer analyzes it as become both of this becoming totally zero and both of these also becoming totally zero, and hence the profit of 7.72. So you may not get this entire profit, but you can definitely get close to it. But what you ideally do is when you reach something like a low, so uh, here what we need to keep in mind is, um, say when you're doing options buying, you're expecting the price to increase, be it a options call options or a put options, you are expecting the price to increase. So these two are buy options. From 5.8, I would want it to go to 7.2, 7.5, 10, 20, 30, 40, whatever it is. Only then I'm earning profit. Here, the similar way, because these two are buy. When these two are sell, I'm expecting them to reduce. So I would make when it goes to now it is like say at 80, 79.95, it is at 80. When I expect when it goes to 50, that's when I would make 30 points. So it is a virtual selling first and a buying later. Understand the difference? Okay, so you can play around here with a lot of options when you go to strategy builder, right? You can play with a lot of options. You can mix and match, and that's how I explain that. You may want to when you want to have when you're having a bigger investment and you want to keep it safer for a longer time and you know get decent returns. You can probably try these strategies. Now, when you're playing it smart, you can also do this. You can go for some non-directional strategies, and looking at the market sentiments right now, you can also go in for any one of the short-term strategies, something like a bullish one. So which means that when you're totally bullish on the market, you can apply any one, like say long call. This is just like a long call which is totally assigned. From here on, when the market moves so much, you will be getting so much. Got it? But the probability of profit is very less when it comes to this, because you are on one side going to lose theta. Okay, now one thing that I missed on the option chain is about the open interest and so on. Okay, let me come back here. So there is a field called change in OI, there is a OI, there is a volume, and rest of them are IV we did speak about. LTP is the current market rate, and change is how much has it changed since the open of the market today. The bid quantity is somebody who's who's requesting how much amount is he bidding out for, maybe a sell, maybe a buy. The bid rate, the ask rate. So you would see at every strikes, the bid and quantity would be different, which would be close to what the strike price of that particular option is. Right? So now let me quickly touch upon what is open interest. So whenever there is a user who comes into the market, right, and say buyer wants to buy a option, he cannot buy it till a seller sells it, right? So it is just like say for example, you want to buy a real estate, a flat, but until and unless a builder opens up for sale, you cannot buy that flat, right? So here, what you do is, okay, let's come to the total options term and compare it with the real estate market so that you'll get a fair idea about what happens. Okay. Now assume that a builder has opened up his flats for sale. So at that point of time, you as a buyer are interested, but the cost of the flat is 1.3 CR, which you do not have right at the moment. But what you're saying is, I'll give you a token advance. This is my advance, and but I'll register it, say, probably after a year. This is a long-term contract. So, in ideal sense, you get a contract note. You would be making some agreement saying that, okay, this is what it is, this is how it is, and so on. So, in this period of time, the Karnataka government has declared that there is a bypass which is going to come right beside this apartment. So, naturally, the apartment price is definitely going to increase. So you still as a buyer has a right to exercise this contract, saying that we had made a promise with a premium. saying that I would be purchasing this cost at 1.3 CR only. You cannot give me more than that. It is a breach of contract. So you would have to give me at that rate. But assume that you have somebody in your office who is more interested in your flat. So what he would say is, okay, he sees that there is a potential development here. So he says that, okay, you have brought for 1.3 CR. The current market price, what the builder is quoting right now is 1.8 CR. So he would say, Dinesh, why don't you give that to me, that flat to me? I'll pay you 1.7 CR. Okay, so but the contract that I've made is only of a 10,000 or a lakh rupees to the builder. So what I would do instead of selling it to the contractor is selling it to this guy, to this friend of mine. So here what happens is on a open interest position, there is still one open interest that is open, but the volume has become two. That is what you have here. So why did the volume become two? Because I was the first initial buyer and I sold it to somebody else. So the volume has become two added on the volume, but the open interest, the contract totally remains the same. That is one contract is open between one buyer and one with the seller. So that is only one contract. Do you understand this logic? Can you kind of relate it to options? No answer.
Yeah, got it.
Okay, all right. Yeah, so that is what uh, open interest is. And what is change in open interest? Whatever are the additions um, that has come newly since this morning. So today when the market opened, it would have opened at zero, and then there would be a lot of interest which would have been created. I mean, the newly opened interest, that is called a change in open interest. So your OIs are the ones that has been carried forward, and right now it is the exact the newly changed ones. So what do you make out of this? What we do out of this is, now when we look at the option chain, what we would look is there are multiple open interests being opened at every strike. Okay, so uh, at every strike there are different open interests. The max that we can see is 44,700. This is 1,17,000. Oh, we see 1,70,000 also over here, but this is a little far from 44,600 to travel to 45,000. It is almost 400 points. So we'll look at the closest one, which is out of the market. So this becomes our immediate resistance. Like what call writers are doing is they're selling more of 44,700 calls. So the market at any point of time cannot go away more than 44,700. Okay. Similarly, I would look at change in open interest. So the change in open interest is also at a different place right now. It is the maximum is here at 57,954. But the closest to the this one is once again here. The closest to the ATM price is here. That is 41,164. Similarly, we would find for the volume. So wherever we find that everything is on one particular strike price, we could consider that as a strongest resistance. Similarly, we would find here also. We would find here at the bottom portion, that is the place where we would see that it is the strongest support. Okay, so apart from drawing lines to figure out what is the support and resistance, we can also look at option chain as an option to figure out where our support and resistance is. Okay, is this kind of clear? We spoke about drawing support and resistance in the last class, the previous video. So we would look at where the stock goes and reverses back. That becomes our resistance point. Similarly, where does it go down and find a support and reverses back upside? That's where our support point is. So these are two things that we had learned last week. So a similar way to learn a support and resistance is by looking at the options chain. Okay. Now, what is the drawback of option chain? Option chains are these are numbers totally which has to be learned looking at the NSE data. And there is a slight lag in getting these data. But nevertheless, it does not make a huge impact because all these does not go on, it totally does not go on minute by minute. It takes time to build an option chain, and similarly, it takes time to break it also. So you can depend upon it for at least 15 minutes. The data would not refresh. But on a budget day, you have to be ensured. Not only budget day, every big day you will have to ensure that you really don't look at the option chain because the positions are there, but the market may move very violently in case of news. Basically, not only events, but in case of any news, we should be we should not be looking at the option chain. We should not be looking at any numbers as such. It is wise to watch only the option chain when we do this. All right. Now, let's see how we can let's see how we can search for an option and try to. So my intention here was to go for, I would say that, I'm expecting the market to go up from here. Right now it is at 44,584. So my at the money option is 44,600. So how would I search here? So I'll say Bank Nifty 45,600. That is my strike price. And these are the closest expiries. 4th of October is the expiry. So I may want to trade in this one because this is the one which would give me a little more liquidity and I can exit fast at it. Like that as soon as there is a breakout, I'll go and take a trade, or wherever I find a support, I'll take a trade. And as per my logic, say 20 points is my target. As soon as it goes 20 points, I'll go and book a profit. So assume that I'm going for a call option. So when I go here, right now it is at 8 rupees 75 paise. So there is delivery, there is intraday. So delivery is something which I can carry forward to the next day. Intraday is something that the broker would square it off by end of day. That is the only difference. Apart from that, you do not have anything else to do. Okay. So let's see what is the cost here. The approximate requirement is 155 rupees. So approximately 9 rupees and 15 is a lot. Now let's quickly see what would happen if I were to sell the same one. It is not even giving this, but it has to be a big number, something around 60, 70,000, right? So that's how you buy. I mean, all that you do is buy and hit the buy button. It would buy the stock and similarly hit on the sell and it would sell the stock. So this is the graph that it has created. You can in Grow, you can go into technicals and you can look at the prices here. This is the wrong one. Uh, doesn't seem to be right. What we seen was 8 rupees. Now here it is showing as 486. Here also it is showing as 8.75. The market is closed, so there could be something or the other happening. Similarly, you can go for checking what is the option chain. You will get a few things over here itself, like what is the strike price, what is the call price, what is the put price, so on and so forth. The data is not coming correctly. It is showing 486 here, around about 226 here. It's showing 875 here. I don't know which to believe. Okay, so that's how you go ahead and place a trade in an option. Any questions so far? Or, I mean, I'm pretty much done. Okay. I'm pretty much done. There are a few things that I have given you for reading: the options Greeks, the ITM, ATM, OTM, the futures and options. I mean, it is not very easy to cover the entire, but I've touched upon major topics and kind of ensured that everything is like really touched upon. Any questions about this or any questions otherwise also I'm ready to take.
What is the minimum
Sir,
amount to start with for options?
Okay. Yeah. So um, options, see, if you're going for a bank nifty option, like an at the money, it depends upon which day you're taking. Say, for example, you start on a start of the expiry day, like every Wednesday, bank nifty expires. So Thursday we start. So the at the money call will be round about 300 to 400 rupees on an average. Okay. You multiply by that 15 because the lot size is 15. You cannot buy one or two shares out of it. You have to buy it in a lot. So one lot would be the number of 15. So 15 into 4, 6, that is 6,000 approximately for one single lot.
For that one, you have to hedge also, right?
Uh, Here, what I'm talking about is a naked buying. Okay, so now say you are a buyer. What you will do is to hedge also, you'll take a put position also. Like say, for example, you have taken 4600 C. That is where you're expecting the market to go up. But you'll also take a 40,000 PE. You will buy that also just for your hedging. Okay. So that will be like a minimum cost, like say 4 rupees, 5 rupees, something that would be the premium. So 15 into 5, 75 rupees. That is what you're hedging your money with.
Okay.
Okay.
How many lots is the best to buy, or you can start with a single lot to learn?
Yeah, of course. To learn, you would always start with a single lot. The funda again goes the same way, like the candle formation. If you would have learned the patterns, like if it is making a double top, triple top, or is it making a flag and pole pattern, ascending triangle or a descending triangle. All this is something that you would consider, and based on that, you will take your trades. Anything like this is a trend line. If you're trading at a trend line breakout, say probably this is something that you would consider. This is my trend line and this candle has broken down. So it has broken down. Now it is coming for retesting. Now our next um, idea would be that after the retesting, it may go down again. That is how a normal pattern works. So you would have to analyze all of that and say you have purchased one lot here. So here you have got a decent profit. It is better to come out here and then let it retest. When it comes here again in this area, you can buy it once again and wait for a longer drive.
How is your like app going to help us in this one? Like your website, you told me has it created some link.
Okay. Now that is a totally different thing, which I don't think I do. We can, or it's idle to discuss here because the intention of this one was totally to uh, talk about uh, talk about what options and futures are. Just get your hands on. So what I'm doing there is trying to automate the entire thing. Like for example, let me take this trend line. For example, if I have a strategy which I can build on this trend line break, I want to take a trade. So I can do that. Okay, so you don't have to go and manually punch in the order. The system on a logic, it would go and take a trade. That's what I'm doing. Okay, if you want uh, if you want me to talk more about the site and things, I'll stop the recording and then we can speak more about it because this thing I just want to keep it as a option trading knowledge sharing session.
Divakar, do you look at PCR data when you
Of
make an
course.
entry?
Yes. PCR is very, very important.
Okay. And what platform do you use for monitoring the PCR data?
Okay, I can firstly go to NSE, but it is quite it's quite complicated there, and you don't get a history. So there is a site by the name niftychain.in.
Is it free?
Yes, right now it is free, but very soon it is going to be paid.
Okay.
Okay, I can talk about little about this site, but that is somebody else's. So, but I had been with this person while he was in the initial stages as well. I mean, I was always following him when he was doing this.
Mm.
More from a development perspective, because my strategies also are on the option chain. So I was just following this.
Mm.
Okay. So this guy, what he does is he's giving you all of this. There are, you see this PCROI. There is a lot of things that is there. So if you see here PCR of the OI, you will get it here. PCR of the OI change. It's here. The call put ratio. This is the put call ratio. Here he is also talking about the call put ratio. There are many other analysis that he does. So uh, this again is a lot of information in itself. If anybody wants to learn, he has given some 2 hours course, 2 hours each, 2 videos on YouTube on his YouTube channel. So you can go ahead and look out for that as well if you want to learn.
Mhm.
If you go to his site, he would have given us YouTube link. Yep, official YouTube link is here.
Yeah.
Yeah,
Even
and
official Telegram channel and other details.
yes. There are a lot of things, and yeah, I'm also a part of this official Telegram group channel. We discuss a lot of things there.
And one more thing, any other platform where we can get PCR data for free?
There are many. Sensible is one thing that I had opened, right? I think Sensible also has got.
Okay, I'm not
Yeah,
sure of
even these guys, they do have a option chain.
Junior.
Yeah,
No,
not
not the
Shunya.
option.
The
I
Opstra has it.
okay. Like every 5 minutes, there's uh, calculate the PCR data and share it like that, something like that.
Yeah, so this guy does it. This Nifty chain, he does it.
Yeah. Okay.
You can't see anything happening right now because the market is closed, right?
Yeah.
So yeah, this is something I would want you guys to at least back test and try. This is a amazing strategy. Like anybody who's coming new into the market, if you want to start with a small profits, this is the place to be. I mean, don't just go by my few minutes of education, but look up. There are many good channels. There is somebody called as Theta Gainers on YouTube. Uh, I learned a lot of things looking at his videos, and I've automated few
Okay.
as well.
Okay. Okay.
I'm not advertising anybody, but genuinely, which I found. Anyway, this is not a sponsored one, so this is a free channel. So
Mhm.
I'm not promoting anybody, but these are the places where I went to look for. And you can always contact me for any questions or anything. I would be able to help. Can I stop recording? We can talk about anything else, which
Okay.
thank you.